Over the past 4 decades, the airline industry has changed the way people live and experience the world. The advent of budget airlines has also had a significant impact on travel, often at the expense of traditional carriers. With us to speak about innovations that could shake up the industry over the next few years is Olivier Müller, Head of Consumer Goods Research at Credit Suisse. Ollie, we've seen many changes in flying over the past few decades. What big innovations can we expect over the coming years?
Over the last 20-30 years, we have been seeing two big trends. The first is that pricing has come down massively due to a number of reasons, for instance, competition. And the second big trend is that at the same time, passenger volume growth has grown quite substantially. For instance, over the last 10 years, and despite the financial crisis, passenger volume growth has increased by 5.6%, which is quite substantial. I think this trend is likely to continue. Pricing will remain under pressure and volumes will continue to increase, particularly in Asia. And innovation in that area will probably be in the area of IT systems that could help to increase efficiency and further help on the pricing.
And we've seen that budget airlines have come more and more into the scene in the past decade, and the traditional carriers are starting to model a similar approach with regards to pricing. Are there dangers associated with this? Is it sustainable?
I think it is a sustainable approach. Look, low-cost airlines have two basically differentiating factors. First, on the revenue line, where they try to be flexible on the pricing, where they try to charge for every extra, and on the cost side, where they try to keep cost as low as possible. And traditional airlines have been mimicking that behavior, particularly on the top line, on the pricing side. Think, for instance, Lufthansa, think, for instance, also Air France. We think that is going to continue. The threat is that it forces airlines to become big, because airline industry is a volume business. It requires a lot of operating leverage, and that will inevitably force kind of combinations or mergers or bigger alliances, or even kind of inter-country mergers, like for instance Air France and KLM a couple of years ago.
And we've seen the popularity of high-speed trains increasing quickly as well, so land travel. How could this shake up the airline industry?
I think yes, because it's at the end of the day, it's a competition in terms of pricing and travel times. So if you have to travel from Zurich to Paris or from Barcelona to Madrid, it's a question of which methods of travel is cheaper and takes less time. So I think that increases the pricing pressure on airlines.
And looking ahead, what are some of the critical elements for success for airlines in an environment of rising costs for fuel and labour?
I think they have three drivers they could influence. The first is on the revenue line, particularly pricing, where I think they will continue to charge for every extra, for instance, a specific seat, for instance, fuel surcharges, etc. Second is they will have to keep costs low, though they have limited flexibility, because more than 50% is fuel and staff cost. And the third, where I think they have the biggest leverage, is efficiency, where they will need to improve seat load factors, aircraft utilization, etc.
Thanks, Ollie. For more information on market movements and global trends, check out News and Expertise on the Credit Suisse website.